Hello everyone, welcome you all to the Indian Investor YouTube channel where you learn stock markets in detail. Friends, today I'm going to do analysis of some stocks which are fundamentally good and which I believe can give some good returns in the coming future. So which are these companies? Let's do the detailed analysis. Let's look at the prices where one should enter and how much can they rally in the coming future. So the first stock that I want to share with you that I'm going to analyze, the name of this company is Clean Science and Technology Limited. So this is a recently listed stock, and if you look at the details, Clean Science and Technology CSTL recently concluded its IPO via an offer for sale of around 15.5 billion INR, priced at around INR 900 rupee per share. Post the IPO, the promoter shareholding stands at around 78%, and it has emerged as the global leader in most of its product categories on the back of niche product offerings catering to polymer inhibitors, super absorbents, and antioxidants for the food, feed industry, pharma, home, and personal care. It has further bolstered its value chain through novel manufacturing technology based on green chemistry for one of the key raw materials. And CSTL's streak is driven by its strong R&D capabilities in both plant technological engineering development as well as process innovation based on greener chemistries. This has led to the gross margin expanding to 76% in FY21 from 62% in FY16, and the EBITDA margin expanded from 33% to 50.5% over this period. The company has posted a robust revenue CAGR of 29% in the last 5 years, which is very good, and we can expect the company CSTL's revenue to grow at a CAGR of 23% over FY21 to 24 on the back of capacity additions at Unit 3 in phases over FY 2022. The company plans to capture higher market share for its products, and its EBITDA margins is likely to remain robust at 49% with the gross margin at 70% over FY21 to 24 as the company continues to improve the yield of its products and processes. Now, in view of its dominating product market share and ability to sustain the highest margins in the industry, I value the company very highly, and it is the largest producer of monomethyl ether of hydroquinone MEHQ and butylated hydroxyanisole BHA and 4-MAP globally. So furthermore, it has backward integrated into producing anisole, a key raw material, and has even become the largest producer of anisole globally. And Clean Science is also one of the top 3 global producers of the remaining 3 products. And MEHQ is its largest selling product, 48% of total revenue, and the company holds a 52% of global market share, which it expects to increase further to 65% over the next 2 to 3 years. And most players in the Indian specialty chemicals industry view China as a competitor. However, this company rather sees the Chinese market as an opportunity as it supplies its products to this country, which contributed 37% to its revenue in FY21 and is the biggest market for the company. The company started producing anisole through the liquid phase technology, an unclean and inefficient route in 2017, but through its in-house R&D, the company developed a greener route, vapor phase technology, in 2018, making it the only company globally to manufacture via this process. So that's a very good sign. The company is continuing its pursuit of process innovation through catalytic technology, and Clean Science has forayed into the hindered amine light stabilizers HALS series 2, and applications for the same are in diverse industries such as polymerization inhibitor, water treatment, paint, coating, and very many other things. Now, the estimated global market size for HALs is around $1 billion, and CSTL would be the first company to develop it in India. While many companies in the space only have a single R&D center, Clean Science has a separate one for all its manufacturing facilities. It is also setting up an R&D center at its third unit, where it proposes to install R&D equipment to synthesize new products and certain catalysts under development, and the introduction of vapor phase technology, which is cost effective, and continued process innovation aided EBITDA margin improvement to 50.5% in FY21 from 33% in FY16, resulting in an EBITDA CAGR of 40% of our FY16 to 21, a 53% CAGR in the last 3 years, led by the commissioning of the initial capacity in FY18. Unit 3, which would get commissioned in phases over FY 2022, would focus on anisole already commissioned in first quarter FY 2022 and certain performance chemicals, although the management has not provided any capacity bifurcation. Unit 3 would also have the first line of production dedicated to HALS series, while additional production lines would be installed in Unit 4. Additional capacity expansion would drive further growth for the company, accompanied by low margin volatility. The global market for MEHQ, anisole and EP is expected to grow approximately at 6% over the next 5 years. For BHA4, MAP and DCC, the market is expected to grow by 4% over the same period. So we can expect continued market share gains on the back of its developed expertise despite mid-single digit market growth for its products. And in order to meet the growing demand from end user industry, CSTL is in the process of expanding its capacities by at least 20,000 MT at Unit 3 in addition to its 2 existing units at Kurkum with total capacity of 29,900 MT. So CSTL has also acquired land for Unit 4, which would focus on stabilizers and other downstream intermediates for pharma and agro. It is an integrated player for its key products and is likely to grow at a faster rate than the industry due to its cost advantage as well as the introduction of new products. Now CSTL is likely to generate FCF of around INR 6.4 billion over FY 22 to 24 earning, with capex of around 3 billion planned over this period, and thus funding its capex purely via internal accrual and remain net cash going forward as well. The company Clean Science has guided for a dividend payout policy of 15% in view of its better cash generation, and it also completed buyback of equity share worth around 491 million in FY20. I think this is a very good stock and it looks great for the long term. And if you look at the chart, it was recently listed in around July, and I think the stock looks good. Any correction till 2000, I think, like if there is correction till 2000, I think there it can touch once, and after that I think it will go higher and make new highs. So if you're looking to invest, I think 2000 would be the price where one can enter. I think the stock from there will be a good bet for in the future. So you can do your analysis in it. You can keep the stock radar clean, and I think it can be a good bet. So now let's look at another stock which is also looking attractive. Now this company, if you look at the returns, now this stock has given around 2223% of returns in the last 10 years, and in the last 5 years this stock is up 350%. In the last 1 year, 189%, year till date 163%, in the last 3 months 24%, 10% in 1 month, 5% 1 week. So it's in a very good momentum and continuously performing. It also has a dividend yield of 0.93%, and the name of this company is DCM Shriram Limited. Now let's talk about it. DCM Shriram Limited is a diversified company with business in agri-chemical, plastic, cement, textile and energy services. The company's chlorovinyl business, which contributes highest to the company's total revenue, is growing at a CAGR of 20%, and going forward the management is confident of maintaining its current margins. DCM Shriram Limited is a leading business conglomerate, and it has manufacturing facilities of fertilizer, chlorovinyl and cement in Kota, Rajasthan, and of chlor-alkali in Bharuch, Gujarat. DCM Shriram is a spin-off from trifurcation of the reputed erstwhile DCM group in 1990. It has high management efficiency with a high ROE of 20%. It also has strong ability to service debt, as the company has a low debt to EBITDA ratio of around 0.7 times, and the company has declared positive result for the last 3 consecutive quarters. Let's look at the chart of this stock. So if you look at it, currently trading near 1030, I think 950 would be the price where the stock has good support. So if there is any correction, like previous day you had a chance to buy, the same way if there is any small term correction, I think 950 would be the price where I would look to enter in this stock. I think this stock has the potential to achieve targets of 1200 in the next few months, and in the long term it can achieve some very good targets. So this was the second stock and the last stock. I hope you liked my analysis. See you again soon with another stock analysis video. Till then, goodbye, take care, happy trading, happy investing.